What's going on, y'all? Happy Tuesday. I hope everybody had a solid trading day. I'm going to be covering a few different topics, but the main focus is going to be explaining why I'm a contrarian trader, how the markets work, or at least from my understanding, and why you never want to be where all the money is. So let's try to give this a shot. I'm going to try to draw a scale. So let's pretend this is a very crooked and ugly scale, but it works, right? So you have a scale. You have both sides, even though it looks super crooked. Let's pretend it's not. Everything is symmetrical. It is balanced, assuming nothing is on it. On one side, you're going to have your calls and your buys. So one thing I want to make very clear is there are multiple different factors for everything. For SPY, for example, or SPX, you have calls, you have puts, you have people who might be long futures, short futures. So there are multiple flows that come into play and essentially make the overall flow. You also have individual stocks. So it's very difficult to calculate the value of everything as one, but you do need to keep in mind all of that information. Because, for example, some days you might have you might have a slightly different flow on SPX than you might have on SPY. Generally about the same, but there are times where you have different flows. So you have one side versus the other, assuming you have, should I do text? I'll do text. Assuming you have $5 million on each side. This is going to be a balanced beam, right? Once you start getting, more money on one side is when you're going to start to see, I'm not going to redraw the whole beam, but you get the gist. You start seeing this side come down a bit. Sorry, this side comes down because it's heavier. This side comes up. For the most part, if there is a small disbalance, what happens with the scale? It's going to be a slower move. Once you put something a lot heavier, like a 10-to-1, you're going to have a very different drop. So same way physics work with the scale. If you have, you start with 10 pounds on each side, then all of a sudden you switch to 10-pound one for a 100 one, you're going to get an instant drop, and this one would come up. It works in the same way with prices and markets, slightly different. Like I said, there are many different factors you need to consider. I'm going to go ahead and bring up the CoreWeave comments from earlier. So if you look at CoreWeave today, this one here, you had 1.26 billion on the call side, and that's in dollars, versus 104.69 million on the puts. You had, sorry, this is yesterday's data. You have 25% multi-leg, and then let's go ahead and put this in actually. So let's make this smaller. Bring us to another screen. So we had, or should I leave it so you guys can see the values? I'll leave it. That way you guys can see the values. Let's do this. Oh, come on. There you go. CoreWeave right here. So you have, oh, come on. Whatever, that's gonna be annoying. I'll just write it up, but you guys saw the values. I can share them again in a second. So 1.26 billion on calls, and then you have 104.69 million on the puts. That is yesterday's data. I'm gonna go ahead and get today's data. Sorry, that is today's data. Let me share yesterday's data. 1 second. Matter of fact, while we're actually no, I'll cover SPY after. So yesterday we had 1.61 billion on the call side. 1.61 billion. and we had 91.34 million. So I'm pretty sure, you know, I don't need to do the math. I don't need to pull out a calculator or anything. You guys see, by the way, this is CoreWeave. So let's put it up. This is the flow on CoreWeave. There is a bit of this that might have been sold, about 33% max. But even if 33% of these are sold, the house can still take all of this and profit. Let's say these are calls bought, right? The house can take all these premiums, even if 33% are sold. Okay, maybe 33% of the equity will not be taken, but essentially this comes down, these go up. Same way a scale works. There's a lot of money here. There's overweight in the calls and the buy side on CR CoreWeave. So what happens? All of this money gets dropped. This money happens to go up as a byproduct. I'm gonna show a chart real quick on it, just because it's a pretty interesting chart, if I'm being honest. We are currently above here. Yesterday, we had a super bearish tape on the options. The way I read it, we have this move down and then a super bearish tape again, in the aspect that everyone is loading calls up. That is not going to work, in my opinion, when everyone is on one side. Doesn't end up working out too well. Where are my drawings? Here they are. So again, keep in mind, anytime you're entering a trade, you do not want to be in the trade if the flow is against you, whether it is intraday or a swing. The data I'm sharing right now is more so for swings. If you want to look at some data that can help you out, decide where the money is intraday, you can look at different tools, which I'm going to show you right now. But Market Chameleon is a free site. This one right here, free website. You can see the entire, flow that you had on the stocks. And the one we have on CoreWeave is really interesting here. But let me go ahead and show you guys what you can do for intraday on something like SPY. I think I already had it up. Yes. So one thing you can do, you also don't need to pay for any data, is, so let me explain what this is real fast. This chart you see, the blue one, my original one I've been using right now, is going to be SPY 600 calls, 0 DTE, by the way. The purple and orange is going to be regular SPY spot price, and then the white and pink is going to be your SPY 600 puts. So anytime you're doing this, it has to be for your 0 DTE. It works okay on other ones as well, but it's going to work like if you're using, let's say, an EMA, it's going to be like a lagging EMA. You want to do it on 0 DTE because those have the biggest, most volatile and fastest movements. So you don't have a lag on your data per se. So again, it is 600 SPY puts versus 600 SPY calls, and the purple and orange is the actual underlying. I'm going to go ahead and go back to where the day gets started. So here we have the open, both open at roughly, whoops, I already had drawings on this, forgot. Let's hide indicators. Or I'll leave indicators for now. That's fine. So we have the open here, right? SPY, small push up, then we roll over. But one thing I want you guys to focus on in this video, or at least this part of the video, is when the actual options converge. What do I mean by the options converge? When you have a cross in options prices. So again, these are your puts. Your calls open here. They cross here once, and then they cross here again. That is generally a time you're going to get a shift in price delivery. So within this range here, you can see you had a small push up on SPY. When we roll over here to the downside, This is where you get your cross in those premiums. And generally after that is when you have those bigger size moves. From these highs, like these are the puts again, SPY here at the lows, calls come up, obviously, right? But here, when SPY was chopping into the highs, you can see that is when we converged on the actual options. So despite the fact that SPY was chopping higher, both premiums were getting eaten up per se, or, you know, down here at the lows. When you get the actual breakout is when you get your premium spikes. And it happened to be at the same time it had a crossover with the puts. So anytime you're going to go into a trade, generally you don't want to enter, you know, when you have these bigger moves, you're better off taking it on those conversions. This is okay, but if you're being honest, anytime you have massive volatility like the one we had here, realistically it's very hard to keep a grip on your risk, because you have massive, you know, candles where whether you're on the correct or the wrong side of the trade, those contracts are going to move super fast, where realistically it's going to be very hard to manage. So I try to refrain from taking trades in these massive moves, and I like to take something like this when you have the actual conversion on, you know, the call to put premiums. I'm gonna go over one more thing relating to this intraday on SPY. I sent out some pictures of the flow in the Discord. Where is it? Here we go. So let's full screen this. This was around around 9 a.m. So 9 a.m. around here is when I sent these out. So the point of this is that the flow was way too much money on the put side. As you can see, 69% puts, but look at the value. This is SPY, by the way, 800,000. On the call side, it is 200,000, a little less, 190,000 with 31%. If you come to SPX, look at the percent, 55. You'd think it's balanced, right? 45. You'd say, oh, that's a pretty balanced tape, 45, 55, pretty balanced. Look at the values. 30 million versus 63 million. Despite the fact that your volume was pretty even, the value was way different. So you need to take a look at the values. That's what I was explaining about this, you know, the scale example. Wherever there's more money, it just makes sense for them to take it the other way. So in this point in time, you had probably over 2-to-1 on the put side. What does that mean? They can take all those premiums, 60 million, right? Assuming, pay out the 30 million, and they pocket that 30 million profit per se. Let me know if that makes sense. If not, you know, send me a DM or reply in the comments or something to answer your questions. But generally, that's what being a market maker is. You create a market, you sell your product. You're selling calls, you're selling puts, you're selling many different assets, but you need to create demand for it. Whatever is, you know, currently cool is what you have demand for. Eventually things die out, no one wants to trade it. And then right now that, you know, Tesla's been pretty active, you have massive amount of volume coming in. CoreWeave, massive amounts of volume coming in. But the game is the same. You should be a net seller majority of the time. You know, you can buy stuff too, but if you're trying to make money, whatever business you're in, you know, you're selling tacos, you're selling waters, whatever you're selling, the goal is to sell. So if you can buy, you know, inventory at great prices, you know, you can sell for more, great. But ideally, the profit comes when you're selling, and, you know, the goal is to sell your products. So same thing with the market makers. So be aware of where you are in your trades. Like I said, this is intraday on 0DTE calls versus puts, but you also need to look at the bigger picture and keep in mind, you know, where the money is. Was there another thing I wanted to cover in this video? I think that'll be it just for this one. I'll make another video discussing risk. I know you guys have been asking about it, But essentially, this is a number one thing I like to look at. One, never be on where all the money is, and that is both for intraday and for higher time frame swings. But that's about it. I'll catch y'all.